think for Asia Pacific or Asia private credit, it's going through a turning point actually. So it's only the inception of the huge growth will take place. Because if you look at Asian market, it's only like, the banks are still dominating the lending market. Like over 80% of Asian banks are, kind of has a share in the direct lending as well as private credit, while the US only 30%, something like that. So we do see a huge growth potential in the market. Especially Asia, we focus a lot on the mid-market kind of bespoke, kind of customized lending or solutions to the end, end borrowers. And with the tariff, with a lot of volatility in the market, we do see there is more need for those solutions. And if you look at some other areas of the Asia, kind of liquidity provider in Asia market, like just one example is like Asia high yield bond. Used to be like over 250 billion. Today is only less than 100 billion, right? So there is a lot of gap that the small, medium enterprise need a solution to go through these, stormy days, ahead with the tariff, a lot of headwinds out there, macro headwinds. I think that's the key, solutions for those SMEs.
So you're only doing non-investment grade credit opportunities outside of the United States. Do you feel like, given what happened over the last month or so and what is expected to happen in terms of uncertainty and so on, that maybe you should move up the grade?
Sure. I think that's a very good question. It's also the function of the expected return for Asia private credit, actually. So, a lot of times when the global LPs allocate money into Asia, they compare what is the expected IRR in US versus Europe or Asia, right? So for the sponsor deals or investment grade, still provide you, it's attractive return in that sense, but only like 7 to 8%, type of return, which can be good. But as a private, credit investor, it tend to be a little bit lower. So for SC Lowy, we are targeting something close to double digit to, sometimes depends on the country, industry, we get to 15%. That's kind of where we try to generate the returns. And because of that, I think the investment grade, sponsor financing deals, we strongly believe that it's less attractive for global, investors' point of view.
Some of the major players in the United States, right, they are talking about opening this up to the retail investors. How do you feel about that? Do you see Asia eventually picking that up?
Definitely. That's, that's a trend, right? Obviously, I think asset managers, for the institutional money, they are trying to push down the fees actually more and more. Clearly, I think that's why the global, GPs are trying to expand to the retail, investors, where, they can provide, kind of customized solutions. But at the same time, I think obviously the fee they can generate are better with the retail investors. But Asia so far, we haven't really go actively to the retail guys. For us, our main limited partners, investors are still institutional investors out there. One encouraging thing that we see today is like, US global LPs usually just focus in US market because Asia is only like 5 to 7% allocation in global the private credit. And I think with the diversifications, with the, macro headwinds in tariff, different things happening in US, we are seeing them slowly, but, start pay attention to Asia private credit. And they are seriously looking at, diversification. They are looking at how to, look at Asia private credit managers. Actually, that's starting quite a bit. So that's very encouraging for us.